Sunday, breaking down Bitcoin. What is it? Should you own it? Or is it a financial disaster waiting to happen? Everything you ever wanted to know about the cryptocurrency, but were afraid to ask. We'll answer those questions this week on Fox 10 Newsmaker Sunday. Thanks for joining us. And our guest this week is Geoffrey Smith, a professor at ASU, PhD, a guy who knows currencies well. And he admittedly told me moments ago, he's learning as we're going on Bitcoin, but you know a lot about it. Thanks for being here. Great to see you.
My pleasure.
When we show Bitcoin, we'll put up some Bitcoin, and this is really kind of, this is a Bitcoin ATM, by the way. But there is no physical coin, right? So when we see these graphic representations, this is for our benefit. This lives in the virtual world, doesn't it?
It's entirely electronic, and we're not used to that in the United States because we're used to having dollar bills and coins and doing transactions. But if you really think about it, most of the U.S. currency is also digital, right? So when you go to the bank, your account is represented electronically. They don't have a big pile of dollar bills.
Your credit card.
Your credit card's also electronic as well. So we're sort of used to having digital currency. We just don't think of it that way.
Okay, take me to fifth grade explanation. If you had what would that be, a 10-year-old or something on an airplane, and they said, "What's Bitcoin, Geoffrey?"
Yeah.
What would you tell them?
Well, I would say Bitcoin's a digital currency. The advantage of it is that it's a distributed ledger. And what that simply means is that the record keeping is done sort of globally on the internet. And there's people called miners that are responsible for keeping track of these transactions, making sure the transactions are valid, and providing record keeping of the transactions. And so, instead of having a traditional bank, which sort of keeps track of these transactions, or your credit card, for example, which keeps track of the transactions, it's just a currency that, is tracked on a distributed ledger across the internet.
Totally visible to anyone who wants to look.
It's totally invisible that anyone wants to look, and it's also anonymous in the sense that it's very hard to track who is undertaking the transactions.
And this has been one of the criticisms of cryptocurrencies, using that as an umbrella term, is that the anonymity. People talk about they're using it to buy, say, sex trafficking, drugs, weapons, stuff like that. You can't track the money.
That is true, but there are also some other advantages. So, for example, if you live in a country where the government is corrupt, or the legal system is corrupt, or the banking system is corrupt, having that anonymity and being able to store value and protect it from corrupt governments, corrupt legal systems, that's a major advantage of that type of anonymity as well.
Bitcoin is now accepted by over 125,000 merchants worldwide.
Yes.
This is a far wider net of acceptability, I think, than we knew.
Yes, and that is ultimately what's going to determine the value of Bitcoin, is its acceptability at various merchants. And so, that's what underlies the value of the U.S. dollar. People want it in order to conduct transactions. And so if people can also simultaneously use Bitcoin as well, then that's what determines its value.
And Bitcoin, if you do a transaction, there are no ancillary charges to it. You're not paying Chase Bank, right?
Yes.
There's some transaction charge.
There are some transaction
It's small,
fees.
though, right,
it's
compared
small.
to a credit card.
And, of course, as things mature and, become more competitive and more efficient, those fees will, of course, decrease. The other thing I would say, just want to add, too, is if Amazon or Walmart starts taking Bitcoin as a means of exchange, then that's a game changer. All of a sudden it's useful in everyday transactions.
Is that possibly coming?
If that comes, that's a game changer.
Have you heard any rumblings of that?
I have not, but you think Amazon is sort of an innovative company, they may want to get in on that. And so
Tesla takes it.
Tesla takes
Microsoft takes it.
Microsoft takes it. And so, once you start getting these big retailers and it becomes more common, it's definitely going to have some intrinsic value. Okay,
now Bitcoin was started, and we don't even know if this is true. It's some pseudonym. This guy named Satoshi Nakamoto. Mm-hmm. Who is this guy? Is he real?
It's a real person. That's obviously a pseudonym. And, it's just a computer guy that's, really good at programming that started Bitcoin. Not much is really known about him. But it's like one of these things that's sort of out there now, and, people are starting to use it. And it's hard to modify. So
Could this be somebody that we know? he's actually a very public figure who's going by this pseudonym.
I guess. I mean, that's total speculation on who the actual person is, although you might be someone who's very good at programming. And sometimes those guys are...
Why remain anonymous?
That I don't know. I don't know the answer to that.
I mean, it's an interesting thing. It's kind of quirky, and it adds a mystery to all of this.
It does add a mystery. Yeah, I agree with you on that, but I'm not sure why.
Okay, let's go to what's happened with Bitcoin in the past year. If I'm not mistaken, Bitcoin has gone from $800 a Bitcoin to, in 2017, to 18,000. I think it's retreated a little bit.
Yep.
This is a jump of 2,100%.
Yes, it's turned out to be good if you got in at the beginning. But what I would say is that it's very hard to determine what the intrinsic value is, what the true value of a Bitcoin is. And we have this idea called kind of the greater fool theory. And what that says is that people start to speculate in things, not because the thing has intrinsic value, but because they're anticipating some other speculator is going to come in down the road and pay an even higher price. And so it's very difficult to determine whether that's the true intrinsic value of Bitcoin, or if it's this greater fool theory at work, where you have speculators hoping that some other speculator is going to come along and buy it at an even higher price. So it's very hard to determine the intrinsic value.
Can you make an analogy between Bitcoin and a commodity play on the market? But the difference, I guess, with a commodity, you're buying coffee and there is actual physical coffee, or pork bellies, or oranges, or whatever it is.
And that's one of the problems, I would say, with the cryptocurrency in general, is there is no backing to it. It just has its own value in exchange. It's just that you can use it for exchange purposes. But if you think about the US dollar or any other foreign currency, none of them are really backed by any commodity or gold or silver or anything like that. And so the value is just determined by its usefulness in exchange.
So when we see this representation on the board of these Bitcoins, it's not real.
It's just a representation, yeah.
So, okay, so if you want to buy Bitcoin, this is something you're going to do with an app on your phone, and you're going to download it, and it will show some type of representation that you own a Bitcoin. If you buy or invest in Bitcoin, the current price today is how much?
About 16,000.
Do you have to buy a single Bitcoin, like a share of stock, for 16,000?
Well, that's one great advantage, is you can buy fractional Bitcoins, and it's divisible into very, very small parts. So you can buy half a Bitcoin, or a tenth of a Bitcoin, or 1/100th of a Bitcoin.
So if you want to throw $2 or $3 grand in and roll the dice, you can.
Yeah, buy 1/8 of a Bitcoin.
But a lot of savvy investors are saying, I would not invest anything you're not willing to lose.
Yeah, because right now there's so much volatility. So you have to be willing to stomach the volatility. Volatility is a good thing and a bad thing. We think of volatility as maybe a bad thing, but volatility just means that it could go way up or it could go way down. And so people are speculating on the volatility.
We heard that, we think of Bitcoin, we've heard a lot about it in this past year. What people may not be aware of, and what could affect its value down the line, is that there are 1,000 cryptocurrencies floating around out there?
Yes, and so I do liken it to the beginning of the internet, where you had all kinds of companies starting internet websites, pets.com, myspace.com, Napster, all of these old names for the internet companies, and everyone sort of speculated on, these internet companies are going to make money, and all of them are pretty much gone at this point. And so that's one of the concerns I have about Bitcoin, is that some other competitor is going to come along with better features, and that's going to diminish the value of Bitcoin. And so maybe Bitcoin is sort of the first one, but people are going to work the kinks out and find better ways of using this technology. And that may ultimately lead to the demise of Bitcoin. You just don't know.
You can, well, I guess with the American dollar, you can print them infinitely.
And that's one of the major advantages of Bitcoin, is that there's only going to be 21 million of them produced.
Now, why is that?
Ever.
They put a cap on it?
Yeah.
From the outset?
Yes, and probably to establish its value, to promise, that the value won't be diminished by newly created Bitcoins, beyond some limit. And so that's definitely one of the advantages, is that, it can't be inflated to no purchasing power.
Right.
You know, like the U.S. dollar, like you mentioned, right?
We just print money.
Yeah, you want to do a new infrastructure project. You know, nobody wants to pay taxes. You're not going to go out there and say, you know, let's raise taxes so we can do this stuff. And so they just create the dollars to fund these types of projects.
Just print the money.
Right, and that's inflationary.
Bitcoin, again, the limit on it is how much?
21 million.
21 million Bitcoin.
But again, remember, they're divisible into smaller parts.
Sure.
So.
But 21 million, do you have any idea, or has anyone speculated why that became the figure that they put the cap on?
I do not know that, although it may represent something to the founder.
Right.
Yeah.
Lucky number.
Yeah.
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 Which is mine, by the way.
Okay.
21. Okay, so Bitcoin, who would the next biggest competitor be? Would it be
Ethereum?
Ethereum.
Right, and so what you see people doing now is adding features, you know, to make it more attractive. And so Ethereum allows for these things called smart contracts. And so what it allows you to do is contract for maybe borrowing and lending arrangements. Or you could have
A will.
A will, right, so that the contracts are entirely enforceable by the computer system. And so you don't have to worry about enforcement of the contracts. And that's a big problem in financial markets. Because, for example, if you have an options transaction with a second party, another party, and you know, we have to make sure that your counterparty is going to perform on the contract. And so there's various institutions in place that ensure counterparty risk is eliminated. But we can do away with those institutions if the computer system can eliminate counterparty risk. And so Ethereum may be one step towards eliminating counterparty risk.
So, for instance, if you put your money in Ethereum and said, upon my demise, this Ethereum goes to, it's ironclad.
It's ironclad, right. So now you don't have legal expenses, contract enforcement expenses. And, you know, so that's value creation.
It's value creation, but for governments, it's got to be frightening. Because the tax implications, if they can't tax this.
That's true, but I would also say that governments would just need to innovate and find other ways of taxing. You know, so you don't necessarily have to tax incomes or tax sales. You know, for example, if you want to use the national park, you could just pay a fee, you know, to use the national park rather than tax people to maintain the national park. So there's other ways that governments can raise money besides income taxation or sales taxation. They just have to innovate.
Several governments have outlawed Bitcoin. I think there's 5 currently. You know, Kyrgyzstan, and there are some quirky countries that have said no, we're not going to get involved in this. I suspect this is a real threat, potentially, to government monetary policy.
It is an absolute threat to government monetary policy, and it's, you know, things tend to want to have freedom, and so, you know, things are on the internet, and maybe it's going to be difficult for a government to enforce, you know, that type of ban. It might be very difficult to enforce.
Do we know if this was a U.S. creation, or do we know?
I think it was Japanese.
It was Japanese.
Yeah. But of course, once the technology spreads, you know, there's over 1,000 cryptocurrencies. So I know in Arizona there's Dash, where they're starting another crypto called Dash.
Let me throw, since you mentioned Arizona, I want to read something. This is interesting. An investor alert on virtual currency offerings from the Arizona Corporation Commission. They said that unlike traditional currencies, these alternative investments typically are not backed by tangible assets, are not issued by a government authority, and are maybe subject to little or no regulation. The value of cryptocurrencies is extremely volatile. They are vulnerable to sharp changes in price due to unexpected events or changes in market sentiment. The Corporation Commission is urging investors to avoid investing more than they can afford to lose in these types of risky investments. They put out, the Corporation Commission this week, put out this warning.
The thing is, you know, what you start getting in markets sometimes we call it animal spirits.
It's been running Wall Street for years.
Right, and so I think they're trying to protect, you know, investors from getting carried away with their emotions. You know, you see it rising from 15,000 to 20,000, you know, maybe you want to get in, but as I said, we don't know the true intrinsic value, and so some of that is speculative, and someone could lose on their speculation, and I think it's appropriate to maybe warn, you know, investors that it is volatile. You know, there's no guarantee.
This is going to sound very elitist, but during the housing bubble, the joke was, when the tree trimmer starts, this is not a knock on tree trimmers made money in this thing too.
Right.
When the tree trimmer is telling you, yeah, I bought a second and third property, people were like, whoa, 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 what's going on here? because people are buying on the margin and they're leveraging.
Yes.
And this is what led to the problem.
Yes, it is a little bit elitist, I agree, but the idea is that if people who normally don't pay attention to these things are now paying attention to them, you know, maybe the news value is getting people hyped up, you know.
Well, I think it's happening with Bitcoin.
Yes.
Are we seeing this now, where people, run-of-the-mill people who were not particularly in tune with Wall Street or investing or 401ks, they're looking at Bitcoin and going, I'm all in?
Well, my story about my teaching assistant at Arizona State University.
This is interesting.
Yes. You know, she comes to my office and she tells me about her Bitcoin profits all the time. And, you know, I'm busy doing my professor job. You know, I don't have time to invest in Bitcoin. And every week she comes in and tells me how much money she's made in the Bitcoin market. And she's definitely made more money in Bitcoin than from being my teaching assistant.
So who should be the professor?
Yeah, who should be the professor, right, yeah. So,
well, what does that tell you? I mean, and
right.
have you said to her, hey, maybe it's time to sell, or are you just staying out of it?
I stay out of it. I tried to teach her the term house money because she told me she withdrew all her initial investment and now she's just playing with her profits.
Okay.
You know,
well,
so I tried to teach her the term, well, you're playing with house money.
That's exactly right.
Yeah.
And it's a powerful thing. If you're gambling and you've already established that you're not going to lose,
right.
There's a lot less stress.
Yeah, so she's out of it with whatever her initial investment is she took out, and she's just playing.
If someone asked you, should I invest in Bitcoin? And we'll take a break after this. If someone said, Geoffrey, what do you think? Should I dive in?
I think that it's probably something that may increase in value, but I liken it, as I said, to the beginning of the internet. So if you were an investor in pets.com, you lost everything. If you were an investor in facebook.com, you made a fortune. And so it's very difficult to determine which cryptocurrencies are going to survive and which ones are going to fail. And, you know, maybe you want to diversify and invest in 4 or 5 different cryptocurrencies, you know, because you just don't know which one is going to succeed. But in general, that market may succeed.
Are there funds now established that give you diversification within a...
I would certainly suggest that some financial wizard innovate that type of product.
That's a very good...
You can buy small shares of, you know, 100 different
Then you're diversified within the fund.
Right. We always recommend
like a mutual
fund. Like a mutual fund. And so you participate in that market without taking the individual risk of one particular.
That sounds better to me.
Yes.
The upside may not be there, but the downside may not be either.
Exactly.
Geoffrey Smith, ASU researcher, expert on currencies and on Bitcoin. But as he mentioned, and he's very upfront about it, we're all learning as we go. Back in a minute with more about Bitcoin and cryptocurrency on Newsmaker Sunday.
Newsmaker Sunday with Fox 10's John Hook.
Thanks for joining us again on Newsmaker Sunday. We're talking about Bitcoin and cryptocurrency, everything you were afraid to ask, and a lot is unknown. I mean, I certainly am getting an education here. Let's roll tape number 2. Let's look at Bitcoin for a minute, because in 2017, now imagine this, it jumped from $800 a Bitcoin. Geoffrey Smith is our guest on Newsmaker Sunday. Jumped from $800 a Bitcoin to $18,000 one Bitcoin. So if you were lucky enough to buy at the beginning of January and sell at the end of December, you got a 20 times return.
Yes.
It's pretty big.
It's actually outperformed gold, I think, for the past couple of years. So, you know, people think of gold as an alternative currency, but it's actually outperformed gold. So.
Let me run another tape here, Geoffrey, if I can. Prosecutors, U.S. attorneys in Utah, this is tape number 4. This is interesting. They were prosecuting a multi-million-dollar opioid drug ring, and they seized Bitcoin in the middle of this. And they quickly moved to sell it because they say the Bitcoin has skyrocketed in value, and it's now worth, they were arrested, these guys were arrested a year ago. It was a multi-million-dollar deal. They got $8.5 million off this. It was worth less than $500,000 when they seized it originally. And they're like, we better sell this because we don't know what to do with this stuff.
Right.
So even prosecutors are having, they've got some issues when they make a bust. What do we do with this new currency?
Yeah, it's definitely very volatile. You know, I think the market will eventually settle down. I think there's some institutions, some investment banks and institutions that are developing futures markets in Bitcoin.
Wow.
And what that allows you to do is to contract for future delivery of Bitcoin at a fixed price today.
Okay, we talked about this at the beginning. If you just joined us, there is no physical Bitcoin. If you invest in Bitcoin, you'll download an app, a wallet, on your iPhone.
That's correct.
You will give them a credit card, probably to buy it. That's the usual way, right?
Yep.
Cash. I don't know how else you do it.
Banking account. You can link your
banking
checking
account,
right?
And then you buy a Bitcoin, and from there, then it becomes kind of untraceable, right?
Yes. Yeah. There's a private key that only you know. And,
but if you cash it in, if you sold your Bitcoin, it would come back to your credit card, right?
Yeah, you can.
So there is a bank record of it.
I guess, yeah, I guess you're right. So maybe transactions within the network are anonymous, but as soon as you leave the network, you know, it wouldn't be anonymous anymore, obviously, because then you're engaging the banking system, the U.S. banking system.
Why is there such a premium on anonymity, unless it's for illegal activity?
People maybe value privacy. But as I said, you know, not all countries are like the United States with a strong legal system. And so, you know, if you're in a less developed country where governments can confiscate your assets, or, you know, you want to...
Or they crash all of a sudden.
Or they crash all of a sudden, you know, that type of anonymity may be very valuable in those types of economies.
It strikes me that I would think the majority of people dealing in this are trying to avoid paying taxes.
Yes, right. And certainly the intrinsic value of Bitcoin, one of the things that creates value is the ability to avoid taxes. There's no question about it. So there's transactions value, but there's also storage value,
record keeping.
Yeah.
It's transparent.
Yeah.
The government, United States, have they made a position on have they taken a position on this yet?
I think that the transactions amounts are so small right now that they really hasn't gotten a lot of interest from government regulators and people like that. I also believe that there may be a generational reason for that, and that is, you know, younger people are going to be more amenable to banking online and having digital currencies, and maybe sort of the old guard that's in the government, they're just not aware, they just don't think in those terms. So it's
They're
probably
thinking of the greenback.
Yeah, so it's probably a combination of it's not very big right now, and we're just not used to dealing with this type of thing.
Do you think a guy like Steve Mnuchin would get up to speed on this pretty quickly?
Yeah, I think so, definitely. You know, governments are interested in taxation and regulation, things like that. So, you know, they'll get up to speed very quickly on that.
We're back in a minute. Final moments with Geoffrey Smith, ASU researcher and expert on currencies. He's fast becoming an expert on Bitcoin and virtual currency. We're back in a minute on Newsmaker Sunday. Geoffrey Smith is our guest on Newsmaker Sunday. We've been digging down into these cryptocurrencies, particularly Bitcoin, which you've been hearing a lot about. It's gone through the roof this year. I read this story that the two guys who bought a pizza back in 2010, they bought 2 pizzas back in 2010. That purchase was $20. It would now be worth something like, I think it was $600,000 or something.
Okay.
I mean, it shows how this thing has just exploded.
Yes, absolutely. And, you know, what that also means is that the value of the U.S. dollar is going down, right? As one currency goes up, it automatically means the other value of the other currency is going down. And that's the real threat to governments because, you know, it's going to limit the amount of inflation that the government can create because it's obviously going to have to compete with a digital currency at some level. And so to the extent that Bitcoin's going up, it means the dollar's going down, and, you know, that's harmful.
The fact that Bitcoin isn't backed by any intrinsic value, what is its value?
It has value in exchange, right, and maybe possibly as a store of value. But ever since the U.S. went off the gold standard, you know, there's no backing to the U.S. dollar either. People like to think that it's backed by something, but it's only backed by what people are willing to use it for. You know, and so...
What about the FDIC insurance?
FDIC insurance just means that if you put your money in the bank, it's not going to disappear. It doesn't mean it's going to have any value.
Is there worry that somebody could say, hey, this has been fun with this Bitcoin thing, I'm taking it all, thank you very much?
Yeah, the system is supposedly set up to be extremely secure. And so you could probably argue that it's even more secure than keeping your money in the bank.
Wow.
Because after all, the bank is just an institution and it's subject to human error and geographic constraints. But if Bitcoin is a distributed ledger, then the record keeping is global. It's maintained by millions of different users that all have to reconcile at the end of the day. And so it may even be more secure and more stable than a traditional bank.
Biggest downside?
Biggest downside right now is volatility and competition. So there's thousands of different cryptocurrencies out there. We just don't know which one is going to survive.
Is this a game changer?
It's an absolute game changer. You know, it's a threat to governments. It's a product, right? So to the extent it has advantages, you know, people are going to use it. And if it has advantages over the dollar, then people will use it instead of it.
Geoffrey Smith, thank you very much. Really interesting stuff. We'll see you next week on Newsmaker Sunday.